What I've seen from following a few of you on X, people that I follow, and also I had a good call from a good friend of mine who's also involved in precious metals and gold. He's given me a lot of good information about what's going on in the Gulf cooperation countries over the last 6 months. And he noted to me that the UAE, or more exactly Abu Dhabi in the UAE, said to the Trump administration, I quote, and Luke Groman saw this as well, I've got here on X, he said, "You started this war. If we run short of US dollars as a result of it, either you will give us US dollar swap lines, or we will be forced to start transacting oil and gas in Chinese yuan and other currencies." And this came out of the Wall Street Journal. I think that's the biggest news today. And by that I mean Monday or early Tuesday, it doesn't matter. That's the biggest news, because from what I knew prior to today, the UAE was 100% behind the US to defeat Iran, but now it's saying, look, if you're not going to help us, we're going to go to the Chinese yuan and other currencies. And I think this is even more important to gold, because the Chinese, yes, they don't mind people transacting in the yuan, but they'd rather people convert those yuan eventually into gold, because they want to be a major transaction currency. They want to be independent of the dollar. They want to have their own methods of payment. They don't want to be dependent on SWIFT, which was started by JP Morgan, really, and the big banks in the 60s. So, and the reason they don't want that, and we were talking at dinner last night, we went to a really nice typical Korean dinner. One of the American investors, and he watches the channel too, he saw me and he was joking. He said, "You look a lot better in person than on the videos." He's a really funny guy, and we both agreed China doesn't want Triffin's dilemma. Yeah, what is that? Well, that's making your currency not just the major transacting currency, but the major reserve currency, because that pushes other countries to want to sell as much as they can to you. It hurts your balance of payments, your current account deficit, your trade deficit. And that's what the U.S. has. China has learned its lesson, right? So that's why gold is going to continue to be so important. Commodities are going to continue to be so important. Talking about gold, silver, I also saw here, was it Eric Young? He posted, yes, exactly, the higher pre-VAT silver price in China is what drives this. Physical silver naturally flows to the market that offers the best price. China imports most silver ever in March. Investment and industrial demand drove inflows from the world, and that's from Bloomberg. So there you go. And it's going to continue. As for commodities, I refer back to 2022 and Zoltan Pozsar, who said that commodities was going to be the most important thing now, not the dollar. He compared the comment that John Connolly made in the early 70s to his European counterparts. He was Secretary of the Treasury at the time. He said, the dollar is our currency, but it's your problem. And Zoltan said now, from 2022, it's going to be the commodity is ours, and that's your problem, right? So that's China saying that. So the world now is really desperate to become less dependent on China for commodities. And the other thing I've got here is from Gary Bohm, who I've been interviewed by in Money in Metals and Miners, but he posted a really good chart here. The fourth great super cycle, the 15-year deficit, the cleared runway to the mining boom, the World Bank pivot, and the coming capex explosion, and how the U.S. Treasury just ignited the hard asset boom. So there you go. So why am I here? Well, I was invited by the CEO of Pure Tungsten, Tiger Kim, to come over. And there are other investors here. There's also Eric Robinson, my friend from Chancery Royalty. And many of you have heard of Pure Tungsten. I've plugged this company, and it's part of all this commodity run. I'll just go over a little bit about Pure Tungsten if you're interested. The corporate presentation says, mission statement, Pure Tungsten wants to be the largest Western producer of tungsten. That sounds very ambitious. Well, the problem is for tungsten has been controlled by China for decades. The production, they produce over 80% of the tungsten, and now, like with a lot of other critical minerals, even like silver, from the 1st of January, they limit the amount. They've limited the amount of silver that can be exported. They put export controls. They're putting export controls on tungsten, and the price of tungsten has gone up at least 5, sometimes 6-fold, sometimes even more in the last 18 months or so. And yes, it's really hard to get. There's that old term about silver that eventually it will go unobtainium, and I think that's what's happening with tungsten. And the Sangjiang mine, that's like a time capsule, so to speak. They were mining back in the 70s. They had to close down because the Chinese drove the price down so much. But now with this problem, supply problem with tungsten, it's becoming very interesting, and this mine is going to be producing, I think, by the end of June. So as some of you know already, and some of you have contacted me, there's a pre-IPO investment opportunity that is still running. They're looking to raise 5 million Canadian dollars at a price of 50 Canadian cents, and it would value the company, let's say, at $125 million Canadian dollars. And just for comparison, and they're looking to produce initial production target they have is 1,000 tons of concentrate per annum, ramping up to 4,000 tons within 2 to 3 years. And there's another publicly listed company that has a mine nearby here in South Korea with a 2,200 tons a year target, and they've been valued at billions of dollars as a company on their publicly listed company. And of course, nothing is certain in life. I think it's a great opportunity.
It's not explainable in terms of a common sense or a typical A plus B equals C reaction, because a spike in oil price happens to greatly enhance inflation or the chance of higher inflation. When we see crude oil go down, we would expect the opposite. Lower crude should take gold with it lower, but that's not the case. We're seeing an inverse reaction to crude oil right now. And I think it's the uncertainty factor more than anything else. If the truce holds, if we see the Strait continue to have free passage, I think we will see a normal relationship between crude oil and gold kind of emerge, not the opposite.
What does a normal relationship look like?
Well, normal relationship is higher crude oil tends to lead to more inflationary pressures, and that provides bullish headwinds for gold. The reciprocal is also true. If we see oil going down, it tends to provide tailwinds to gold, stifling the upside move. And so when I say we're getting an inverse relationship, we're getting crude oil going down and gold moving up. That's typically not what we see. We also have to add tremendous dollar weakness, not today, but over the last couple of weeks, we've seen it move from about over 100 on the dollar index to about 96, 97. That's a 3% decline in the value of the dollar when compared to the basket of currencies that compose the index. So you've got that push-pull happening, and both are remarkably, gold is very, very sensitive to moves in both. The way I've been looking at it, for lack of a better term, is to use my Elliott wave count. And so when I look at my chart, we had the all-time record high that came in on January 29th, above 5,600. We then got our A wave, and that moved down to 46.74. Our B wave back up to 54.65. And the low that you're referring to at 4,100 is the conclusion of an ABC correction. And if you think about it, in the Elliott wave count, you've got a motive phase, waves 1 through 5, where 1, 3, and 5 take you in the prevalent trend direction, which we're absolutely up. In fact, gold and silver both moved up tremendously. And when I pull up some charts, I'll show you what I noticed, with silver outperforming gold almost by 50% or greater.